February 28th, 2026, a U.S. and Israel joint operation kills Iran's supreme leader.
The supreme leader of Iran is dead.
Iran's supreme leader is now dead.
Targets have included the supreme leader, Ali Khamenei, as well as the defense minister, as well as the head of the judiciary.
24 hours later, missiles are hitting Dubai. Smoke rises over the skyline.
Panic, chaos, and injuries at the Dubai airport overnight.
The UAE has been hit harder than any other Middle East country or Gulf nation in the war against Iran. This conflict, if it drags on, will impact every sector in the United Arab Emirates, and it will impact the careful structure and kind of vision that the Emirates has set out for itself.
And by March 10th, every news outlet is running the same headline.
Dubai, who saw a massive boom in recent years, has now recorded its first decline. The home price index fell by 5.9% in March compared to the previous month. Dubai residential sales fell by nearly 20% month on month to 37.2 billion dirhams in March. While the slowdown comes amid rising volatility and uncertainty triggered by the ongoing US-Iran conflict.
I'm going to show you exactly why that headline is misleading and what is actually happening in this market right now. Here's what I've been seeing from investors all over the world. Either they panicked completely and walked away from months of planning, or they went quiet, waiting for the real picture. Not the panic version, not the sales pitch version. This video is for the second group. I am a real estate agent based in Dubai and in California. I work Dubai's real estate market every single day, so let me give you what the news did not. My name is Ghada Gigi Benitez. I'm a RERA licensed Dubai real estate agent and licensed in California, and I have helped investors from all over the world buy property in Dubai and the greater UAE. Here's exactly what we are covering today. First, the actual verified numbers from the Dubai Land Department. Not the headlines, but the real data. Second, the honest risks. I'm not here to sell you a fantasy. And third, what does this exact moment mean for a serious investor looking at Dubai right now? The number I'm going to share is near the end of this video. It's the one that stopped me cold when I first saw it. Stay with me. Now, let's go back to the beginning. February 28th, the operation happens. March 1st, missiles hit. March 4th, the Dubai financial market opens. Within minutes, it drops 4.65%. Emaar, Damac, every major developer stock takes a hit. The exchange shuts down for 2 consecutive sessions. By March 10th, the DFM real estate index is down 18%. And that became the headline everywhere. Dubai real estate crashed 20%. But nobody explained that the DFM real estate index tracks listed stocks, companies like Emaar and Damac on the stock exchange. It does not track the price of physical apartments, the price of villas. It does not track off-plan unit values. These are 2 completely different things. When stock markets panic, stocks fall instantly. But if you own an apartment in Dubai, your apartment did not lose 20% of its value in 10 days just because investors sold Emaar shares. The headline was about stocks, and the world confused it with physical property. And millions of investors made decisions based on that confusion. Here's what most people did with that information. They stopped. They said, Dubai is done. I'll wait. And I understand that completely, but here's what they did not see. The Dubai Land Department was publishing numbers during that exact same time period that told a completely different story. And the investors who saw it, they acted. And they're in a different position right now. Let's look at what was actually being recorded. January 2026, before the conflict, Dubai records 72.4 billion dirham in residential sales in 1 month. That is the single highest month in Dubai real estate history ever. Then March comes. Transactions did fall 30%. But buyers were not canceling, they were pausing. A canceled buyer walks away forever. A paused buyer is waiting for the right signal. Between March 23rd and 29th alone, 8.6 billion dirham in property transactions were recorded. That's a 49% increase week over week. And here's the number that reframes everything. Q1 2026, despite the conflict beginning mid-quarter, total property sales reached 176.7 billion dirham. That is a 23.4% year-on-year increase over Q1 2025 during a war. This is not what a collapsing market looks like. This is what a pausing market looks like. Now, if you're thinking, okay, Gigi, but what about the actual prices? What about the risks? These are exactly the right questions. And this is the part I wish someone had explained to me clearly when I first started working in this market. Stay with me. Because what comes next is the honest picture. Because I believe the biggest mistake investors make is treating all Dubai real estate as if it behaves the same way. It does not. And I've been saying this way before that war ever started. A luxury waterfront development does not perform the same way as a mid-market apartment. And by the way, that's true globally, even more so in Dubai. A villa community does not perform the same way as a high-density apartment district. There are reasons for this that I've explained on previous podcasts. And a grade A office investment follows an entirely different set of demand drivers than residential real estate. I've covered this numerous times on the Dubai Connect. The real risk today is not Dubai. The real risk is buying the wrong asset in the wrong location with the wrong developer. Dubai has a substantial future supply pipeline, but that supply is not spread equally across every segment. Most of the upcoming inventory is concentrated in apartment communities. Meanwhile, some of the city's most desirable waterfront districts and established villa communities are constrained by something very simple: limited land. You can buy another tower. You cannot create another Palm Jumeirah. Well, they are doing Palm Jumeirah Ali, but it takes decades. You cannot create another stretch of waterfront coastline, real coastline. And you cannot easily replicate a master community that took many years to establish from the infrastructure on up. The second risk is developer selection. Track records matter. Construction qualities matter. Delivery history matters. Financial strength matters. Developer reputation in Dubai is more important than probably any other market I sell in the world. In my experience, choosing the right developer can be just as important as choosing the right location. So you'll hear real estate agents say location, 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 and that is true. But in Dubai and the UAE, it's also developer, developer, developer. The third risk is having the wrong time horizon. The investors who have historically done best in Dubai were not trying to predict next month's headline. They were positioning themselves around long-term drivers. Again, something I've been talking about since the beginning. The fundamentals that drive Dubai's demand, such as population growth, the infrastructure investment, the economic expansion, the D33 agenda, the Master 2040 plan, business migration, including American companies that have announced setting up headquarters even after the war was announced. According to ValueStrat, villa values are expected to outperform apartments in 2026. And Dubai's Grade A office sector is projected to remain one of the strongest performing commercial segments in the region. Those fundamentals matter far more than short-term market sentiment. By the way, if you are watching this and thinking that you need someone to walk you through what this means for your specific situation, well, that is exactly what I do. My WhatsApp link is in the description below. Please send me a message. Everything I have covered so far, that was context. What I'm about to show you in the next 3 minutes is the reason I am making this episode of this Dubai Connect podcast. There's a specific window open in Dubai right now, and this window historically only appears once per market cycle. Let me show you exactly what I mean. April 7th, 2026, a ceasefire is announced. The Strait of Hormuz begins reopening. What happened to Dubai real estate that same week? Property viewing activity surged 75% almost immediately. Developers reported a threefold increase in customer conversions. 3 times more buyers are moving from inquiry to signed contract. May 2026, Damac Group's managing director has publicly confirmed a clear pickup in premium segment sales. Here's the pattern that is repeated across every major crisis Dubai has ever faced. This can be proven online. Check the numbers on DXB Interact. Sharp sentiment shock, short-term pause, disciplined recovery, and then prices climb higher than before. After 2008, it happened. After COVID, it happened. We're watching it happen again right now. Remember earlier I told you there was a number that made me stop and pay attention? Well, here it is. According to Dubai Land Department data, off-plan transactions have represented roughly 2/3 of all residential transactions in recent years. Let's think about what that means. The majority of buyers in Dubai are not investing based on where the city is today. They're investing based on where Dubai will be in 3, 5, and 10 years from now. That is why investors need to focus on quality rather than quantity. Not every project, not every developer, not every community. The opportunity today is concentrated in 3 sectors, supported by long-term demand and limited supply. Prime waterfront developments, quality villa and townhouse communities, and select commercial opportunities benefiting from Dubai's continued business growth. Let me break each one down. Waterfront real estate first. Across global markets, waterfront communities consistently command a premium because supply is finite. Demand can grow, but waterfront land cannot. There is a reason that areas such as Palm Jumeirah, Dubai Maritime City, Dubai Creek Harbor, Port Rashid Yachts and Marina, along with other select beachfront master communities, continue attracting both local and international buyers. These locations benefit from something investors love: scarcity. As Dubai's population expands and more global capital enters the market, prime waterfront assets remain among the most difficult property types to replicate. And historically, scarcity has been one of the strongest drivers of long-term appreciation. Again, this is proven online, and you can also check out Knight Frank report that goes into this globally and even more so in the micro segment in Dubai. Now, the villa and townhouse segment. According to ValueStrat's latest outlook, villas are expected to outperform apartments in 2026, with projected growth significantly exceeding many apartment segments. Why? Well, demand. More families are relocating to Dubai. More entrepreneurs are relocating to Dubai. More executives are relocating to Dubai. And many of them want larger living spaces, private outdoor areas, community amenities, schools, parks, lifestyle-driven environments. And at the same time, villas represent a relatively small portion of Dubai's total residential inventory. Limited supply combined with growing demand, that has historically created one of the strongest performing segments in the market. And the third, the one many global investors still overlook, and many are not aware that you can purchase without a sponsor now in Dubai, and that is commercial real estate. I'm going to link actually one of my previous podcasts talking about commercial real estate opportunities. And I'm being very specific here. I'm talking about grade A office space. According to CBRE, JLL, and ValueStrat, Dubai's premium office sector continues to benefit from strong occupancy levels, international companies' expansion, and increasing demand for high-quality workspace. The demand drivers here are different. You're not relying solely on residential population growth. You are benefiting from corporate relocation, foreign direct investment, new business formation, and economic expansion. Those trends continued even under these periods of uncertainty. So that is the complete picture. You now understand what happened. You know the real data, the real risks, and the real opportunity. But before I go, there's one thing more I want to share. My honest read of where this market actually stands right now. Dubai is not one market. It is multiple markets moving at different speeds. Some apartment segments may face increased competition as future inventory is delivered. That's reality. But premium waterfront locations continue benefiting from scarcity. Villas and townhouses continue benefiting from strong end-user demand. And Grade A commercial assets continue benefiting from business growth and corporate expansion. Focus less on headlines and more on the fundamentals. Population growth, economic growth, infrastructure investment, scarcity, developer quality, long-term demand. Those are just some of the factors that drive real estate performance over time. Not fear, not social media, not short-term market sentiment. Here's what I want you to do right now. Click the link in the description and send me a WhatsApp message. Share with me your budget and your timeline, and I will personally respond within 24 hours. You just need to be clear on what is possible for you in this market right now. Link is below. I'll see you there. If this video gave you a clearer picture than anything else you have watched on this topic, please hit subscribe, and I'll see you in the next one.